Hello, Oracles! Well, the recession is upon us. Or should I say the recession was upon us. You know, when we look at GDP data that comes out, today we got that negative 0.9%, indicating that we are in a recession. You've got to remember that this is lagging data. This data is indicating what we were in last quarter. And so many people were speaking about it back in June saying, feels like we are in a recession already. And sure enough, today was the day that we got that information saying that yes, we are in a recession. So something that hit me because, why is the market rallying? Why is the market cheering the fact that we just got data telling us that we're in a recession? Well, it goes back to something I talk about all the time, but it didn't click in my head until I just sat down to record this thinking, well, you know what? What does the market like the least? Uncertainty. And what have we been thinking about and talking about for the last month and a half is, are we in a recession? Well, guess what? We just got our clarity. We just got our answer. Our answer is, yes, we were in a recession. Now we don't have to worry about it. Now we have certain answers. So of course the market's going to cheer that. We know where we're at. And to get on top of it, instead of it just being like, all sorts of negative things, we've had some positivity along the course of the week this week, which has kind of fueled the reason we got into a rally today. So again, we talked about it last week that we could see a lot of volatility this week, and sure enough we did, and it ended up being green volatility versus red volatility. We had a lot of earnings coming out this week, many of which were actually more positive and beats than losses. And really when it came down to it was the guidance. There was more positive guidance going forward. And then we had the Fed coming out yesterday talking about a 75 basis point hike, which is what the market had expected. Some people were thinking a 100 basis point hike. But then the Fed also said, you know what, we could potentially pause because right now we are going to go data to data. And as of right now, it seems like we are moving in the right direction. So instead of us saying, you know what, we feel very negatively, we are going to be anticipating a 75 basis point hike for the next FOMC meeting. Now the Fed is saying, we're going to just kind of, tap the brakes right now and see what happens, see what data we get. And the next data that we are going to get as far as inflation goes is going to be the CPI data we get on August 10th. And then a nice little surprise we got this week was Senator Joe Manchin and Senator Chuck Schumer coming together to come up with a climate change bill, and looks like they have actually finally come to an agreement, and this could help bring inflation down as well. So right now we're kind of in a little bit of a lull where we can kind of wait it out. So we're like, all right, well, we are moving in the right direction. Where we see a lot of companies have been announcing that they're either freezing hiring or they're laying people off. So that is going to balance off that unemployment level. And the Fed doesn't want to mess with that and make it any worse if we're already moving in that direction. We are starting to see indications that inflation is coming down. We see oil prices coming down. Gas prices are coming down. Diesel prices are coming down. Commodity prices are coming down. All of this is moving in the right direction. And those are things that the Fed says that they really cannot control. So we've got core CPI coming down. We've got oil and commodity prices coming down. We are trending in the right direction. So again, all of these indicators are showing us that we are moving that direction. So the market's like, all right, this is a good thing. We can start to buy back in because we are moving to where we need to be. And remember that the market is forward looking by 6 to 12 months. So this is a great sign that the market feels like the economy is moving in the right direction, and we will continue to grow over the next 6 to 12 months. And now we're also seeing a nice little tick up after hours today because we had Apple and Amazon reporting earnings. Both of them beat their earnings. Apple came in at $1.20 per share versus $1.16 expected, and Amazon came in at 18 cents versus 13 cents expected. So they also gave positive guidance. iPhone sales were up significantly, and again, for people who are looking at Tesla saying Tesla needs to have more models, they don't have enough models, they're never going to be able to compete, look at Apple. What does Apple have for models? What does Apple offer for products? A very small line. Very few options. They have customizable options within those, similar to what Tesla has, but that's it. Very few, and it's very efficient, so very cost effective when it comes down to producing their products. So Tesla is going to be the same way. So this is why I compare Tesla to Apple, but Tesla is going to be on a much more massive scale than Apple is. And now when it comes to Amazon, Amazon actually beat year-over-year revenues. It wasn't just a beating of expectations, but beating year-over-year is a great sign because last year was a massive year for them. So to be able to come in beating revenues over last year is another good indication that we are moving in the right direction. So at this point right now, for me, Tesla, I had a sell order in for $850 and my lowest price share in my IRA. I'm going to see how we're looking pre-market tomorrow. I might actually change that to a limit stop because if we're going to run some more from this, I'm going to want to take advantage of that. So I'm going to take a look in the morning, see kind of where we're at. So at this point, the way we're trending based on the way the week has been going, tomorrow is the last day of the month. We could be finishing strong tomorrow. I'm going to monitor this because we might be filling that 865 gap. Now in Tesla, don't forget we do have that gap down to 742. We are on a nice run right now. I don't want to say that we have to fill it. Gaps do fill 9 out of 10 times. But when it comes to Tesla, we've got the annual shareholder meeting next week. Vin from Investment Club and I are going to be doing a live stream for that. And then after that, we should be getting news about a split. And so who knows what next month is going to bring. I still think we are going to be trapped in the macro environment. We're not out of the woods yet. A lot of great positive indicators that we have going forward. But still, this is still, a slippery slope that we are on that we could simply fall off of if we get bad CPI data coming in August for some strange reason. Again, indications are pointing towards us moving in the right direction. I would love to see a 7 in front of our CPI data number coming out in August. I don't know what the expectations are yet. We should probably find those out next week. But again, this is kind of what I'm looking forward to, and I'm going to do similar to the Fed and just pay attention to the data that we get on a day-to-day and week-to-week basis to make sure we are still trending in that direction. Now, other awesome positive news that we got this week, which was a surprise catalyst for Tesla. We talked about it before that I think the next huge catalyst is going to be that investment grade upgrade for their credit rating. But we got a surprise catalyst this week with the EV bill that is potentially coming out. Now, it's not just an EV bill, it's a bill that's going to be doing, for the inflation reduction and for climate change and all sorts of different things. But the EV tax credit involved in this was a huge catalyst and another positive piece of the puzzle that contributed to us going green this week. Now, one stock that I'm kind of disappointed I got out of was ENPH, ENPH. I was in them. I made some great money on them in the past. I'm not going to be upset because my money that didn't go into ENPH went into Tesla. I'm happy either way. I'm not going to complain, but ENPH is on a massive run as of late. So if any of you are in ENPH, let me know. Let me know how well you guys are doing. For me right now, at the price it's at, it is too much for me to get into it. I think they're going to do very well long term, but I do see a downturn coming. I think that they're on an up cycle, and there's going to be some profit taking coming in that stock, and it's going to come down, and that money will go into another stock. But on the next dip coming down, I'll see how low they go. If they pull back under $200, I might take a look at them again. But again, when you're looking at energy plays, Tesla is also an energy play, which is another reason why Tesla has been doing so well as of late with the news on this bill, because they can take advantage of all of the EV tax credits and they can take advantage of the energy portion of the bill that is coming out as well. Now in the morning, I'm going to dive more into detail into that energy bill that is coming out, and especially with the EV tax credits and how it's going to relate to Tesla. I just need to get into that and really dive in and get some more information to share it with you guys. But that is coming. That is awesome news. That is going to be something that is going to be amazing for Tesla in the long term. Totally not needed, but I think it's going to be very positive for the company, and I'll explain why in the morning. So again, it was great to see the market today and the way it reacted to all the data that we have been getting. Great to see that we are green. All the indices were up over 1% today. Tesla was up over 2%. So a great day overall, and Tesla now pushing up over 1% after hours to over $850. Let's see what tomorrow brings. Again, it's the last day of the month. Don't know with all the green that we had this week if we are going to see a little bit of a sell-off, maybe that normal Friday fade. But otherwise, when we're looking at fundamentals of the entire economy, when we're looking at the fundamentals of Tesla, things are moving in the right direction. So this is all good. Now we can look back and say, Was 620 the actual bottom for Tesla? We shall find out. Looks like that was the prime buying opportunity. But again, nobody knows what the future is going to bring. I know I am going to continue to do my dollar cost averaging, but right now the future looks like it could be bringing more positivity. So again, we are technically in a recession, but that data is lagging. So we were in a recession. Now we pay attention going forward. Are we going to get a third quarter of negative GDP? We actually moved up, but we have 2 more months. We are going to be getting the second reading for the GDP coming at the end of August, and then we're going to get the third reading coming at the end of September to finalize these numbers to let us know where we were. And then in October, we will get the GDP data for the third quarter and let us know where we were at that point. So again, still moving in the right direction. I don't know if this is going to be a bad recession, if we are going to continue. Let me know your thoughts in the comments if you think we are going to continue into a recession or if we're going to see some positive GDP data come the end of the third quarter. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat, that link is down in the description, and if you'd like to support the channel any further, I do have a Patreon, that link is also in the description. Thank you so much, have a great one.